Let's turn now to Bitcoin. It and other major cryptocurrencies weren't immune from yesterday's sell-off, with Bitcoin dropping as much as 10%. Now, all of this, of course, also after SEC Chair Gary Gensler warned last week that crypto is a Wild West asset class rife with fraud. And Coinbase yesterday dropped its plans to offer a 4% yield product after a pretty public spat with the SEC. Joining me now is Grayscale Investments CEO Michael Sonnenschein. Michael, it's great to have you. Obviously, you guys are still working on this Bitcoin ETF, but you have kind of the major Bitcoin trust product for the time being. I don't know if you want to offer just any general thoughts on how you think over time crypto should be performing as an asset class.
Well, it's great to be here, Kelly. I think there's zero question that in investors' minds, crypto can now occupy a slice of their portfolio allocation. And it's not just Bitcoin anymore. Investors have increasingly been diversifying their cryptocurrency holdings. I think that the SEC and regulators have a tough job at the moment. The ecosystem around digital assets is evolving very, very, very quickly. And even just as recently as today, Chairman Gensler actually had some commentary that once again invited industry participants into the SEC to discuss the products and services they're offering, and stated that the SEC does in fact have the authority to regulate crypto.
Right, which, you know, he seems to be making it very clear that something will be coming in this space. What did Coinbase do wrong from your point of view?
Well, I think Coinbase and companies like Grayscale as well are the types of industry participants that are asked for permission, not for forgiveness types of organizations.
Right.
We're making use of existing securities regulations to provide products and services around digital currencies. So it'd be tough to say exactly what Coinbase did wrong. But unfortunately, I think that, where we are today, there needs to be some more guidance from the SEC, and we really have to move to a place of actual regulation beyond just enforcement actions, which we continue to see.
And I guess the distinction that you're making goes back to other platforms like we were talking about with Kate Rooney yesterday that offer yield products with higher yields. It's unclear exactly how they're generating those yields, and they're not asking for permission, are they?
Well, I think it depends on the company and the product or the service, but there is no doubt that crypto as an asset class in investors' minds is here to stay. And some of these features like staking, lending, earning yield, these are the types of products and services that are becoming increasingly important to investors.
Are you disappointed in the growth of stablecoins and the attention they're now drawing from regulators, having to figure out whether they are akin to money market mutual funds and so forth? I've heard even those like Caitlin Long, who are, Bitcoin hodlers, if you want to call it that, saying this is unhealthy speculative activity, the kinds of credit creation that Bitcoin was intended to avoid in its sort of hard money ethos. So I'm just curious what your point of view is on a lot of this activity that's been taking place.
Well, stablecoins have become a fixture on the digital currency ecosystem, given that they do offer the ability to create a stable point within investors' portfolios when they're moving in and out of different digital currencies, rather than relying on the traditional banking system, which has all kinds of time delays and fees associated with getting back to a fiat asset, be it US dollars or otherwise. But as is the case for Bitcoin, as is the case for stablecoins, it remains early days. And I know that this industry and the momentum behind it will continue to work with regulators to smooth out any concerns that there may be.
So, if we turn back just to what's been going on with Bitcoin and sort of the different investment avenues into it, would you guys launch a Bitcoin futures ETF if that ends up being the only regulatory path?
I wouldn't rule out anything. I think at Grayscale, we've continued to toe a line between providing investors with investment options that we find compelling and that we want to provide unique opportunities and access to, with where investors are telling us they want to have that exposure. I think it would be an unfortunate scenario if the SEC were to only approve Bitcoin futures-based ETFs and not really instead allow for a level playing field, which would put both spot or physically backed Bitcoin ETFs in the market at the same time as futures-based ones, and instead let investors make that decision as to whether or not they want one product or the other.
But what would your response be if the SEC says, well, there's already a way for people to go long Bitcoin, they just literally buy it? Why do they need an ETF?
There is certainly no shortage of evidence that investors want exposure to Bitcoin in the form of a security. Our flagship product, GBTC, has tens of billions of dollars invested in it and is the largest Bitcoin fund in the world. Despite its popularity and its success, though, Kelly, there is still a segment of investors that are waiting for the familiarity and the protection that an ETF wrapper provides. So we feel that this is certainly going to be an important part of the ecosystem that will draw in more capital and will draw in more investors.
Final quick question on this. Is it possible that just as you're sort of making the case for a Bitcoin ETF, the ETF itself loses tax advantages because of changes in Washington?
That is a very interesting question, and that's a new piece of legislation, or a potential piece of legislation that just recently has been floated out there. I think with the rise of ETFs and their popularity and their utilization in investor portfolios, it'd be unfortunate to see any kind of legislation that would dampen the life cycle of ETFs or the growth of that part of the investment universe.
It would certainly be a surprising twist in this story, but we can never rule it out. Michael, thanks for joining us today.
Thank you.
Michael Sonnenschein of Grayscale Investments.
Shepard Smith here. Thanks for watching CNBC on YouTube.